Hey, Florida investors, are you missing out on thousands in tax deductions just because of how your property is depreciated? Today, we're breaking down IRS Form 3115, a hidden gem for real estate investors looking to fix depreciation mistakes, apply bonus depreciation, or claim catch-up deductions. Stick around, because by the end of this video, you'll know how to fill it out, when to use it, and how to save serious money, all without having to amend your prior tax returns. Let's jump right in. IRS Form 3115, officially titled Application for Change in Accounting Method, allows real estate investors to fix how depreciation was previously calculated. Why would you use it? Your CPA used a 39-year schedule for a residential rental instead of 27.5 years. You missed out on depreciation in past years. You completed a cost segregation study. You want to retroactively apply bonus depreciation. All of these scenarios could result in a Section 481A adjustment, which lets you take a huge deduction this year, instead of amending prior returns. Timing matters, especially in Florida where rental income can be seasonal. Here's how it works. If it's an automatic change, most depreciation fixes are, file with your regular return. If it's non-automatic, get IRS approval in advance. What qualifies as a change? Something as simple as fixing your depreciation schedule or implementing a new method across multiple properties. You can even file one form for multiple properties if they follow the same change. Now before we move on, make sure to hit that subscribe button if you're serious about building tax-efficient wealth through real estate. New strategies drop every week. Let's walk through the key parts of the form. Part 1, basic info, your name, entity type, tax year. Part 2, change type, check the automatic change box, usually DCN 7 or 8. Part 3, description. Write a short narrative like, taxpayer is changing depreciation method for rental property placed in service in 20XX from 39-year SL to 27.5-year MACRs. Part 4, Section 481A, adjustment. This is where the magic happens. If you underdepreciated by $50,000, this becomes a one-time deduction this year. Part V, change method reference. Input the DCN from IRS guidance. This form isn't about theory, it's about putting money back into your business. Let's look at an example. A client in Fort Myers had a 10-unit building on the 39-year schedule. After we applied cost segregation, we used Form 3115 to reclassify assets, and they claimed a $65,000 deduction this year. No amendments, no audit, just strategic tax planning. To file, attach Form 3115 to your tax return. Mail a copy to the IRS at Ogden, Utah. Details are always in the current instructions. Stay updated or let us handle it for you. Don't let these mistakes cost you. Skipping the Section 481A calculation, missing attachments, using the wrong DCN, filing late. Pro tip. If you've done a cost segregation study, you might be able to bundle that with Form 3115 and apply bonus depreciation on short-lived assets like HVAC, flooring, and lighting. It's not uncommon for investors to unlock $100,000 or more in deductions using this approach. Form 3115 isn't just a form, it's a tool for growth. Used strategically, it can fuel expansion, improve cash flow, and correct costly tax mistakes. If you're a Florida real estate investor with rental properties or multifamily units, don't let depreciation missteps hold you back. At Square, we specialize in Form 3115 filings, cost segregation integration, and long-term tax strategy. Schedule a consult today, link in the description. And if this video helped you, like it, share it, and don't forget to subscribe for more tax-smart investing strategies. Subscribe for weekly tax strategies. Contact Square Accounting today.